NextEra Energy. Is this a stock you should buy right now? That's what we're going to try to answer here in this analysis video. I like to simplify things, and I'm going to discuss 6 metrics in this analysis: earnings growth, PE ratio, dividends, return on equity, free cash flow, and intrinsic value. They're then put on a 0 to 99 grade scale, so it's easier to visualize the different numbers I'm going to throw at you in this video. The first 5 metrics mostly deal with how good of a business we have. No point investing if it's an undervalued piece of crap. That's why I save intrinsic value near the end. Earnings growth is by far the most important metric. A company that doesn't grow doesn't survive for long. NextEra has a good growth rate of 8.98% per year going forward. That's growth I'd like to see more, and this tells me there's more room to make it to the next level. For PE ratio, most people look at it as a valuation metric. I don't base my intrinsic value on the PE ratio. The PE ratio, to me, is a measurement of hype. Too high and there's just too many eager eyes on the stock. Too low and we might have a hidden gem. NextEra has a decent PE ratio at 17.01. There's interest from investors, but fortunately we're not in speculative territory just yet. Dividends should be an obvious metric and something that a lot of people ignore. I'm going to put it out there. If you buy a stock that doesn't pay you anything, you're speculating, you're not investing. NextEra has an amazing dividend yield at 2.72%. It's typical for these companies to have a nice yield, and it continues here. For return on equity, it tells me a lot about the management. It shows me how efficiently my investment dollars will be treated if I were to buy the stock. NextEra has great management with an ROE at 19.6%. The money you would be putting in will likely be used to get this machine humming along. Free cash flow is my way to evaluate how dominant of a company we're dealing with. The more cash available, the better opportunities to buy up other companies, the better to research, and more money for marketing. NextEra has no cash flow, in fact negative, to the tune of negative $1.48 billion. This amount tells me that we're dealing with an operationally expensive venture with no room to expand through external means. Okay, as I said, these 5 metrics we just went over tells me what kind of business we're dealing with. With a business grade of 66, we're dealing with an above average business. Good growth and a nice dividend, but no free cash to do anything else but stay the course. But before we get our intrinsic value, consider joining my Patreon and get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. As I said, NextEra is a decent business, but let's see what the price tells us in terms of investability. Nonetheless, NextEra is worth $110 per share. Right now, we're looking at a bargain for a stock. Even at a low estimate, you'd be getting in at the perfect time. And now that we've got all the numbers down, we need to put it all together and get our final grade. NextEra has a final grade of 71, and that makes it a good long-term investment. For me, the business is decent, but it's the price that's really attractive. You can't ask for a better combination. But hey, after this video goes out, anything can happen in the next few days, weeks, months, even years. But long-term is always longer than you expect. Keep this in mind. It took Warren Buffett 45 years to become a billionaire. Invest wisely, and as always, take care of your money.